You spent time, you spent money, you went through all the paperwork just to form your LLC and protect yourself. But here's a question nobody asks until it's too late. What if that protection doesn't actually protect you? What if right now, without even knowing it, you are making mistakes that make your LLC completely useless in a lawsuit? There's a legal concept called piercing the corporate veil, and it is the single most devastating thing that can happen to an LLC owner. It means a judge looks at your business, looks at how you've been running it, and says, nope, this isn't a real business. We're coming after your house, your savings, your personal assets. And here's the scary part, it happens more than you think. A study by the Utah Law Review found that courts pierce the corporate veil in nearly 50% of cases where it's attempted. That's not a small number, there's a coin flip between keeping your home and losing it. So in this video, I'm going to show you the 3 deadly mistakes that cause LLC owners to lose their protection and exactly how to fix them before it costs you everything. Stay with me, this one could save your financial life. What is piercing the corporate veil? Let's get this crystal clear first, because most people don't fully understand what they're actually protected from when they form an LLC. When you form an LLC, a limited liability company, the whole point is this. Your business is its own legal entity, separate from you. If the business gets sued, they can come after business assets, not your car, not your home, not your personal bank account. That's the shield, that's the wall. Piercing the corporate veil is when a court decides to tear down that wall. They essentially say this LLC is just a disguise. The owner and the business are the same thing. So we're going after the owner personally. And the reasons courts do this almost always come down to owner behavior, not market conditions, not bad luck, choices you made, which means this is completely preventable. Here are the 3 mistakes that make courts pierce that veil and how to make sure you never make them. Mistake hash 1. Mixing personal and business finances. This is the number 1 reason LLCs get their protection torn away, and it is shockingly common. Imagine this, you formed your LLCs, but you're still using your personal debit card for business expenses. You're depositing client payments into your personal checking account. You're paying your rent from the same account you pay your vendors. You think it all comes out to the same thing, right? Wrong. Dead wrong. Kids, look at this and they see one thing. There is no real separation between you and your business. And if there is no separation, there's no liability protection. This is called commingling funds, and it is one of the fastest ways to hand a lawsuit plaintiff the keys to your personal bank account. Here's what you must do. Open a dedicated business bank account the moment your LLC is formed. Not next week, not when you start making money. Day 1. Every dollar your business earns goes in that account. Every business expense comes out of that account. Never cross the streams, and while you're at it, get a business credit card. Keep your personal spending completely separate, even if you occasionally loan your business money. Document it as a loan. Write it down, keep records. Here's a pro tip. Services like Northwest Registered Agent and Zen Business don't just help you form your LLC, they walk you through setting up your compliance infrastructure so that separation is built in from day 1. Northwest in particular has a reputation for incredibly detailed, private and thorough business formation that sets you up the right way, not just the fast way. Separation isn't just good accounting, it's your legal armor. Mistake hash 2. Ignoring the paperwork. This one surprises people because they think once they form the LLC, they are done. They are not. An LLC isn't a one-time event. It's an ongoing legal relationship between you and your state, and states require ongoing proof that your LLC is real, active and legitimate. Here's what gets ignored and what destroys LLCs in court. No operating agreement. This is the foundational document of your LLC. It outlines ownership, how decisions are made, what happens if a member leaves. Without it, a court can argue your LLC was never a real functioning business entity to begin with. Even single-member LLCs need one. Missing annual reports. Most states require you to file an annual or biennial report to keep your LLC in good standing. Miss it, your LLC could be administratively dissolved. Now you're operating a business that legally doesn't exist anymore. No meeting minutes. Yes, even LLCs should document major decisions, especially in multi-member LLCs. Courts look for these records as proof that you treated your business like a separate, legitimate entity. This is where tools like Harbor Compliance and Rocket Lawyer become genuinely valuable. Harbor Compliance is specifically designed to track your compliance deadlines across states so you never miss a filing. And Rocket Lawyer gives you access to legal documents, templates, and even attorneys to make sure your operating agreement is bulletproof. LegalZoom and Taylor Brands also offer compliance management tools. So depending on where you formed your LLC, there's a service built to keep you in good standing automatically. The bottom line, paperwork isn't a formality. It's your evidence. Evidence that your LLC is real. Evidence that protects you. Don't skip it. Don't delay it. Don't ignore it. Mistake. #3. Undercapitalization. Running your LLC on fumes. This one is the sneakiest because most people don't even know it's a thing. Undercapitalization means your LLC doesn't have enough money or resources to actually operate as a legitimate business. Here's what this looks like in practice. You form an LLC. You put $50 in the business account, you take on clients, you operate, you make revenue, but you immediately pull it all out for personal use. The business is always running on basically nothing. Then someone sues, and the court looks at your business and says this was never a real business, it was always just a shell. There were never real assets here to cover real liabilities, so we're going to look past it. This is called the alter ego doctrine, and it's one of the most powerful tools plaintiffs use to pierce the veil. To avoid this, your LLC needs to have reasonable capitalization, meaning enough money in the business to cover its actual liabilities and operating needs. You don't need to leave millions sitting there, but the business needs to function like a real, financially viable entity. If you're in the early stages and need help structuring this right, Bryzy, Swift Filings, and Inc. Authority are great starting points. They help new business owners not just form their entity, but understand what it takes to operate it compliantly and sustainably from the start. Inc. Authority in particular offers a lot of value for free, making it a great choice if you're bootstrapping. Your LLC needs to look, act, and function like a real business, because that's the only way the law will treat it like one. How to protect yourself. Alright, let's bring this home. 3 mistakes, 3 fixes. Mistake #1, commingling funds. Fix, open a dedicated business bank account. Keep everything separate, always. Mistake #2, skipping the paperwork. Fix, get your operating agreement done, file your annual reports, document your decisions. Use Harbor Compliance, Rocket Lawyer, or LegalZoom to stay on top of it automatically. Mistake #3, undercapitalization. Fix, make sure your LLC has real resources to operate. Don't treat it like a piggy bank, treat it like a business. And honestly, the easiest way to make sure you're doing all of this right, from formation to ongoing compliance, is to use a professional service that handles it for you, whether that's Northwest, Zen Business, Taylor Brands, Swift Filings, Inc. Authority, or any of the others I mentioned. Pick one that fits your budget and your state and let them help you build this the right way. Because the cost of an LLC formation service might be a few $100s. The cost of losing a lawsuit because your whale gets pierced could be everything. If this video helped you, hit that like button. It seriously helps more people find content like this before it's too late for them. And if you want to learn more about LLCs, legal protection, and building a business that's actually structured to survive, subscribe. I put out videos every week breaking down exactly this kind of stuff in plain English. Drop a comment below. Tell me which mistake surprised you the most. I read every single one. I'll see you in the next one. Protect your assets, protect your future.